All right, so welcome to another day of this training. This is day 26, and today we're going to be talking about one of the things I've kept um secrets in my repertoire. Right, so this is a full 30 days training. So I thought it's wise that I should touch on this. This is something I've kept very close to my arsenal, right? I keep it very close to my use, right? And this topic, understanding this topic will give you very big edge, right? To be able to know with a higher precision what the market will do, right? You know, I see a lot of traders, they always, I'm not saying it's wrong to trade technical analysis, but many traders are only focused on technical analysis. They're just focused on the charts, see the chart, the chart. Meanwhile, there are other things that you look at that are just beyond technical analysis, right? There are things you have to consider when it comes to the financial market. And one of those things I kept in my um, repertoire is what I refer to as the SD access correlation, right? So we're talking about the dollar index, we're talking about the dollar index correlation and divergence, right? Yeah, so talking about dollar index correlation and SMT divergence, right? Very important topic. This is something that you need to keep, all right, to your close vest, right? All right. So it's a very important topic. Very important topic. This topic. If you understand this topic alone, you have actually made the greatest breakthrough in your trading, right? Dollar index correlation and SMT divergence, right? So there are other correlations. We have the ones we look at gold. We have the correlations on gold. We have the correlations on silver. We have that on Nasdaq. We have that on other pairs. But for the sake of this 30 days bootcamp, I'll be talking about only the dollar index, right? Other ones have been discussed in my paid mentorship, right? If you feel that you want to learn other ones, you can just join the paid mentorship, right? Before the price increases in the month of, I think the price is increasing by 30% by the month of January, right? 1st January, the price is increasing. So if you want to have access to all that, you can join us. But for the sake of this call, let's talk about the dollar index correlation because most of you guys trade the dollar index pairs. Now, when I refer to dollar index correlation, we are referring to the relationship between the dollar index and other currencies. Right? What is the relationship between dollar index and other currencies? What does dollar index have to do with what the charts, right? So SMT is something I learned on the inner circle trader ICT. It stands for smart money technique or smart money tool, according to what ICT said. So I learned that from the ICT. Once again, shout out ICT, right? I'm not, whenever I learn a concept from someone, I don't try to say I'm the one that discovered it, right? I just tell you that this is the person that taught me this, right? So I learned this from the inner circle with the ICT, right? So now, the dollar index is correlated with different pairs, right? So the dollar index represents the dollar. As dollar index represents dollar, you are referring to what the dollar, the strength and the weakness of the dollar. And you can always see dollar index on your chart, right? You can see it on your chart. Just simply come to this point here. You just type in dollar index. You can see them by different breakers, 8 cap, vantage, pepper stone. So I'm using one by pepper stone for this teaching. All right, so we'll go to Richard very soon. So now, what does dollar index imply? When you look at the pair like the euro dollar, right? So have the euro USD, right? Euro USD simply means it is a chart of the euro against the USD, right? That is simply meaning of euro USD, the euro against the USD. So that is what we're trading, right? Trading the difference between the euro and the USD. So this simply implies that if dollar index or USD index, right? This simply means that if USD is going higher, this simply means that if the dollar index, right, USD, so if the US dollar index is going downwards, what do you expect? That means if the euro is going up, we should expect what? The dollar index to go down. So this is the relationship between euro and dollar index, right? This is a very deep topic. So if the dollar index is going downwards, that means euro should consequently do what? Go upwards, right? Because it's this pair simply means euro USD against the USD, right? It means the euro against the USD. So if the euro is against USD, it's like a tug of war. If euro is going up, that means dollar should go down. And if dollar is going down, that means euro should go up. So euro, USD, and US dollar index are negatively correlated. That means they go in opposite direction. That means they have a negative relationship. So the relationship between dollar index and the euro is what we call negative, right? It's negative correlation. So that's the relationship between the dollar index and um, the dollar index and the this is the relation between the dollar index and the euro dollar. So they have a negative correlation. They're negatively correlated, right? They're negative, meaning that anytime you see euro buying, I'm sure you see dollar index selling. It's very rare you see them doing the same thing, right? So this is the reality of the market when it comes to divergence, right? Divergence is something that actually occurs on the chart almost all the freaking time. Right. So if you can understand this, you are going to reduce your trading headache by lots and a lot. Right. This is one thing that helped me a lot. I see traders marking up their chart and they don't even pay attention to the dollar index. So if you trade the Euro USD, the GBP USD, the AUD USD, the NZ USD, you should always pay attention to this. But the pairs that are very strongly correlated to dollar index is the Euro dollar, right? And then the GBP USD. So these are the major pairs that are very, very correlating. There's also a relationship between Euro USD and GBP USD, which I've taught my page students. And I've taught them the relationship between the Euro USD and the GBP USD, how to look for the crack and correlation, all of those stuff, right? So if I have time, I can just touch a bit about it, but if I cannot do that, then that would be in the paid mentorship, right? So the Euro USD and the dollar index are negatively correlated. So this also means that if we should see a bearish movement on the Euro USD, that's tantamount to what? A bullish movement on the dollar index. Right. So this is how the market book. So the anytime the dollar is going up, we expect what? This guy to drop. Right. So that is their correlation. So now you have understood their correlation. Then there's something we need to also consider, right? You have to consider something very important. So it's not enough to know that they are correlating positively or negatively. There's something that we refer to as a divergence, right? So we have understood that EURUSD and um, dollar index are correlating negatively, opposite direction. So what this also applies to other pairs. If this also applies to GBP, if GPUSD is doing this, also expects the opposite of USD. So GPUSD does the same thing or the opposite to USD index. So I use it the same thing. AUDUSD does the same thing. NZDUSD does the same. Any pair that's against the USD, apart from gold, because gold is fundamentally driven. Apart from gold, most of the pairs that are against the USD are negative correlated. But based on this correlation, how about we call the strong and the weak correlation? So their pairs are very strong correlated. So for instance, I have the strong and the weak, right? So I have the strong and the weak ones. So your focus is the strong correlating pairs, the pairs that the correlation is strong with dollar. So you want to focus on the pairs that have a strong correlation with dollar. That means if dollar is buying, there is dropping. So the strong pairs is number one, Euro USD. So here is the major pair and it's very, very strong against it. So you can look at gold as being weak because gold sometimes you can see gold buying when dollar is buying. So you can classify gold as being weak, right? So that is, gold means SAUUSD, right? That's good. So you can classify gold as being weak because it does not always go opposite. That means the connection between gold and dollar is not so strong. Sometimes you can see the gold and dollar buying. You can see gold and dollar going in the same direction. So it's not really strong. So the strong pairs are the ones you should focus on, like the Euro USD, the GBP So the place you focus. So if you trade for a GBP trader, then you can use the dollar index for your traders, right? So this is it, right? So now, what is the SMT divergence? The SMT divergence refers to what? A crack in correlation. It simply tells that smart money is getting involved in the market. So what do I say? So if the line that's refers to if the market is making what? A high, right? A high on EURUSD, right? Market made a high. Consequently, you want to see US dollar index do what? Make a low, right? Follow me. This is where it gets interesting. So you want to see the dollar index what? Make a low. Why? You want to see the dollar index make a low. Why is that? Right. So once the dollar index make a low, right? When the dollar is once the dollar index make a low, when there is um there is some form of high on the euro dollar, right? Now the SMT divergence happens or occurs when the market fails to do that. So you want to see dollar index make a low because why? The euro dollar has made a high, right? This is what we call a correlating pair. Now, the SMT divergence forms when there is a crack. That means dollar index does not make a low. That was referred to as an SMT divergence. So if dollar index now fails to make a low, and it's a dollar index that does this, right? We refer to it as an SMT divergence. Simply means that there's a crack. SMT simply means a crack in correlation. All right. So if the USD, the euro makes a high, which is this high, you can see the high form, right? You can see this high very clearly. You can see the high very clearly formed by euro USD. But now, instead of dollar index forming a low, it fails to make a low. We refer to this phenomenon as the USD what? SMT divergence. So that simply means that smart money is doing what? Is looking for what? Buys on EUS. That means EUS is very strong and it's refusing to do what? Buy. I mean, refusing to sell, sorry. So this is what's referred as a strength in dollar. So if the EUS makes a high and you don't see a low, remember that they are negatively correlated. If the dollar index doesn't make a low, why the Euro USD makes a high, we refer to this as what we call the SMT divergence. Right? It means that there is a crack in correlation. There is a crack in correlation. That means dollar is not willing to do it to correlate with USD. So this always implies, or most times it implies that smart money is trying to buy dollar. So if smart money is buying dollar, that means euro is going to drop. That means this high is a fake out. So anytime you see dollar index fail to make a low on a higher time frame, and maybe there's a kind of key level, maybe kind of other block on euro index. Let's assume that maybe dollar index failed to make a low, and then that's what euro index do was tap into another block, right? This is dollar index tap into another block, and this guy fails to make a low. That means smart money is buying dollar. That means euro should do what to drop. So you can look for sell opportunities in this. You know that you can't trade DSY. So your focus should always be on what? The euro. So if you see the dollar fail to make a low, then you can look for what? Sell opportunities what? On the euro USD, right? So consequently, this also implies for the opposite direction. So I want to do this again. So if the euro USD makes a low, and dollar index fails to make a high. This simply means that dollar index is what? Dollar index is what? Is bearish. That means smart money is heavy on dollar index and they're not willing to allow price to go further up. So if dollar index is not willing to make a high, that means euro should do what? Should buy. Because dollar index is dropping. So if dollar index is dropping based on smart money intent, they anticipate that the euro will do what? Will buy. So we expect a bullish movement on this. So you're looking at the difference between the highs and the lows. This was the effect of SMT divergence. And that also implies, so if we were to swap places now, if we were to swap places, and we have areas do the same thing. So the same thing as well. So if you see the dollar index make a high and the euro fail to do what? To make a low. This simply means that euro US is what? It's likely going to do what? It's likely going to buy. So you can look out for what? Bullish entries or bullish confirmations on the euro because dollar index is what? It's not correlating with the euro USD. So if you see dollar index make a high and euro failed to make a low, and you see a reason why euro should buy, then you can look for buy opportunities there while looking for sells on dollar index pairs, right? So this is what we mean by correlation, Smt divergence. And note this, we have what we call the positive correlation, but I'm not here to teach positive correlation because it's very easy. If the dollar index is bullish, that means pairs like USD CHF, USD CAD, USD JPY should go. In fact, if you look at your charts, USD JPY, USD CAD, all those USD pairs go the same direction with dollar. So you can also use it to know because dollar is bullish, but it's not always very strong. Sometimes you can see dollar being very bullish and then UJ is stalling or it's ranging. So sometimes it's not always very classical. So, but what we usually use is for the Euro USD or the GP USD. So these are the pairs we really pay attention to when it comes to correlation. We look at what the GBP USD and the Euro USD, right? So I'm not using Euro USD for this example. So it also applies for the opposite. So if dollar index is doing this, Euro USD should do what? Should go what? Higher, right? So that was to anticipate on what? The Euro USD, right? So now let's look at real chart examples. Let's look at real chart examples. So let's look at real chart examples now. All right, so let's look at real chart examples. All right, so we have to use the compare tool. Let's click on compare just to show you guys. So I'm comparing with the USD. So to get the real price scale. So I think I should take that out. Let's use new page. Sorry, I want to compare this. I'm clicking on compare, add symbol. I want to compare with the USD. So I want to compare with the USD. New page, right? So I want to use new page. Sorry, the new page I was looking for. All right. So this is the USD below. So let's quickly change the candlesticks so you can get a better feel for what you're doing here. And this thing have occurs is very beautiful when it happens on the higher time frame, but for the sake of this call, just be using a lower time frame to kind of demystify it. Right. So let's put this on candlesticks. Let's use a candlestick. Right, candles. All right. So this is the euro USD below and the dollar index above, right? So let us now look at the live examples. Why is this taking time to go up? All right. So now let's look at it very carefully. Now, if you look at these two pairs very carefully, what can you see? You can see that they tend to go in the opposite direction. Now, watch very carefully. Watch carefully. Notice that each time the dollar makes um, a high, we usually see what? An opposing low formed on it. Can you see that they move in the opposite direction? You can see just extend back in time. You can see as dollar has been bullish. What have we been seeing on USD? It has been what? Bearish, right? So this is what we refer to as negative correlation, right? So anytime dollar is structurally bullish, maybe you see dollar forming a high and see dollar giving those bullish setups, right? Always anticipate that the EURUSD is going to do what? Is going to what? Do the opposite, right? So just look at it, very, very easy to spot. Let's start from here. Watch this. Watch this. Watch this. I want to get to something here. Watch this something here. Watch something here. Like watch something here. Watch this. Watch. Now, can you see that there was an SMT divergence here? Watch this point very carefully. Watch this. Let's look at this point here. So I'm putting a vertical line at that point to show you guys what I'm referring to. Right, somewhere around there. Yeah, somewhere around there. Watch something happen there. Watch. We saw. Okay. Watch something here. So from here, can you see that each time dollar made a high, you could see a subsequent low here. Can you see this? It was referred to as divergence. So watch this. As dollar made a high, right? Can you see that we saw the opposite on the dollar on the Euro USD just below that? So that's what we tend to see when we are looking at Smt divergence, right? The market always forms that. The dollar always forms that, right? The dollar index always forms that low on width. So it doesn't mean we have to understand why this guy went off. Right, just this is USD, USD below. Let us understand that. So you can see that as the dollar made a high, the euro made a low, right? So this is how this market looks. This is basically how this market looks. You usually see what the market do the opposite, right? So can you see how these things occur? Right, let's look at this. This yield below. I want to swap again to candlesticks. It's still the same thing. Let's use the light to understand this. The same thing occurs there. As the market is going downwards, euro is going was bullish, right? And you see how there has been was a very, very good correlation. Anytime dollar makes a high, euro what makes what a low. It's euro that is at the line chart below. Right? The most important thing you're looking at the high and the low. So you're not really looking at the candles. What you're looking at is what the high and the low. So each time dollar makes a high, you can see the euro dollar was make a low, right? So anytime you see this cracking correlation, that's also referred to as what a SMT divergence, right? What they refer to as SMT divergence, right? So can you see how they're moving in the opposite direction? Let's take a look at it. Right, right. So you can see it here. It's made a high here. You can see what a low formed on the dollar index, right? That is equal to refer to as what an SMT divergence, right? An SMT there as a correlating market, right? Very beautiful correlating market. Very beautiful correlating market, right? So that is basically how these things book. You always do this on your charts. Right. But right now I'm seeing a cracking correlation. Right. I'm seeing a cracking correlation. Can you see there's an essential evidence forming now? Right. Look very carefully on this chart. You can see that um there is a kind of high that is forming. Why this guy is stalling. This euro is stalling, right? It's stalling. You can see that the dollar index has made a high above this high. What is this? There's a high above this high, right? Meanwhile, if you look at that same point to compare it, there's a kind of essence that's forming there. Look at this point from here. You can see that Euro USD has not formed the low yet. So you can see that an SMT is forming at this point. So you might see the Euro USD buy in the future. So what I would like you guys to do is to take this assignment on your own. Go and look for examples where the market gave this setup, right? Look for examples where the market, look at SMT for me, right? Can you see it? Dollar made has made a high, but euro has not made a low. So that means you can see what some kind of bullish movement. And if you check euro USD, euro USD bought some kind of buys yesterday. So that means that SMT has not formed here. Why? Because there's a high here and there's not a low here. So you can expect euro USD to start buying very soon. Right. So I'd like you guys to go to your chart and look for examples where the market gave an SMT divergence and look back for how it's panned out. So I could not see an example here because I'm using a lower time frame chart. But if you go to a higher time frame, you see this thing occur, you see heavy moves, long moves. So I want you guys to take a moment to backtest this information. This can really help you. If the dollar index is bullish, remember, when the dollar is bullish, anticipate the bearishness on USD, right? Until there's a divergence. So if you have a sell bias on EU, right? Maybe you have a bearish structure on EU, and then you're seeing that dollar index is not bullish, dollar index is also bearish. That means you should stay out. If the dollar index is bearish, you can't also be selling EURUSD because it's not going to work, right? So that understanding helps you to avoid a lot of problems or conflicts, right? So avoiding conflicts is knowing that dollar index should go opposite of EURUSD. And whenever there is a crack, you look out for what a reversal or you stay out, right? If maybe you have if you want to sell EURUSD and you see that the dollar index is what also bearish, then it's best to look for what bullish price action of EU because they go what negatively, right? They don't go the same direction, right? So unless you have a crack, this simply means that dollar index is going to drop while EU is going to buy. So this correlation simply means this crack simply means that dollar index is going to drop while E is going to buy, right? So we have to wait. What do you do next? Wait for what? A structural confirmation, a break of structure, and I can see it forming already. I can see a break of structure already. So wait for a break of structure and then look for what bullish opportunities on the $3, right? So I hope you get to see you guys in tomorrow's session. Do want to share this video, like this video, share with your friends, and if you like to have our profit blueprint, use the link in the description. So I hope to see you guys tomorrow. Have a wonderful day. Cheers and God bless.